Day traders ask me all the time why I use tick charts. This is the 2000 tick ES chart. What that means is that each one of these candlesticks is 2000 trades before it prints a new one. So if I hover over this and I middle click on it, you can see some information. So what do you see? You see that this bar was on August 22nd, 2025. It printed at 8:11 and 18 seconds. It shows you the open, high, low, close, shows you how big the bar was in terms of ticks, which means the high to low, which is a 23 tick bar. It shows you the EMA, which is what's on here, but it also shows you the V, the volume, 2501. Now, this bar had 2,000 trades in it. So some people in there were trading one contract. Some people might have been trading 100 contracts. The point is, it takes 2,000 trades to print a new bar. So a lot of people will say, well, you're not looking at volume. What if somebody trades with 5,000 contracts? Well, I can tell you it almost never happens. You can see this bar had 2,501 contracts traded. This one had 2,466. This one had 2,828, 2,547, 2,475. So you can see there's different amounts that are being traded here. This small candle right here had more contracts exchanged than the candles all around it. 2,459, 2,495. You can get the idea. Roughly, these are ranging between about 2,400 and about 2,600, with the occasional one that has a little bit more. And if I pick any time, here, let's go to the present, and I'll just pick a random candle. These ones had more, right? These ones had more because they're at the end of the day. And at the end of the day, these ones had 3,400, 3,000. But let's go to an earlier part of the day. 2,744, 2,692, 2,720, 2,718. Now, what I can tell you is that this day had more volume. It did have more volume, I know, because I was trading this earlier today. And if I go to this day, which is yesterday, these ones are back to like the smaller volume amounts. So the point is, I can only find times where it gets chaotic towards the end of the day when everybody's contracts are getting traded and executed. So you can see here, this is right 15 minutes before the regular session kind of close. Technically, it closes later, but that last 15 minutes of the regular trading hours, it starts to get really chaotic and the candles can have a lot of volume coming through. But for the most part, the volume doesn't really matter. The number of transactors is what matters. When you have 2,000 trades per candle, it's better information for me than a volume bar, because I don't care if somebody trades 100 contracts or one contract. I care about how many buyers and sellers are exchanging place in the market. That gives me a lot more information than just like, oh, is there somebody who executed a 1,000 contract trade, which doesn't happen very often. So that's the main thing. Tick charts are going to give you what you need to know. I don't even need to look at volume. It's on there. It's implied. I can look at it per candle if I want to, but it doesn't give me that information that I need. What it does give me is that the volume doesn't give me the information I need. What the tick charts give me though are where's the momentum, right? So like in this big red candle, the volume's not that big. It actually has about the same volume as the candles next to it. But what it does tell me is, we have basically a two-legged correction, a big bearish candle. And that means that sellers were able to push this thing all the way down. It's probably going to have some follow through. They tried to come back and they couldn't. And there you go. And there's more information in the tick charts than there is on a volume chart. And if you go and pull up a volume chart, you'll see that. And then when people trade time-based charts with a volume indicator, I just don't see the point. Because like, again, with a time-based chart, I might end up with a 1-minute candle that has hardly any transactions, and then another candle next to it that has a lot. On these, I will know if there's a lot of volume because of how fast or slow it takes for 2,000 trades to happen for the candle to print. On a slow day, it might take 3 minutes to print. On a faster, high volatility day, it might take 10 seconds. So that's a big, big thing that will help you understand what's going on. And as a scalper, there is crucial information that you're gaining when you look at tick charts versus time-based charts and versus volume charts or anything else. And people will ask me, oh, well, what about Renko charts? What about Heikin Ashi charts? Well, those are even worse because they're taking out actual price action and making it so you can't see it. They're trying to smooth things so that everything looks super clean. And yeah, would it be really nice to be able to see, oh, the candles are moving down. Oh, now they're moving up. I could just go long. Yeah, well, that strategy doesn't work because you're literally missing key price action and information that's happening in those. So when you have this printed, this is giving you the real picture of what you need. Now, people will say, what about order flow? Why don't you look at order flow? Why don't you look at this? I don't need to. It's all in here in the tick charts. It shows me in each one of these candlesticks what is happening between the buyers, the sellers, and the transactions. Where is the psychology playing out? Where are the two-legged corrections happening? Where is there support coming in? Where's the resistance? Where are people defending the stop losses? Where are they hunting the stop losses? All that stuff showcases every single day on tick charts. So it's really crucial to my trading strategy, and I love trading it. It's changed my trading dramatically. Literally just changing the tick charts changed my trading. Changing to just full-on price action with tick charts made it so much better. And it's such a cool thing.